lend a hand. You can sit around and wait for the phone to ring, waiting for someone to tell you everything. Sit around and wonder what tomorrow will bring. Maybe a diamond ring. Well, it's alright, even if they say you're wrong. Well, it's alright. Sometimes you gotta be strong. Well, it's alright, as long as you got someone to lay. Well, it's alright. Every day is just my day. Good morning, everybody. Happy Monday. It's January 9th. Great to be with all of you today. My name is Bob Lang. It's time for our Daily Bites. If you're new, welcome aboard. Great to have all of you with us today. We do the Daily Bites every Monday and Thursday morning about 8:30 Eastern Time. Talk about markets, talk about the economy, maybe the Fed, things that have happened lately in the markets that can and kind of give us an idea, a path, or a plan to trading over the next couple of days. So today's our Monday edition. Again, great to be with all of you today. So let's talk about markets here. So currently right now we're seeing the S&P 500 futures up real strong. You can see they're up about 22 handles this morning. NASDAQ up about 77. The Dow Industrials up about 130. And that's coming off the heels of a very, very strong day on Friday. And so what happened on Friday? Friday, we saw the markets take off to the upside after some decent numbers from the jobs report, the NFP, which was the non-farm payroll. But what people got very excited about was the slight drop in wages, wage pressure. We were looking for about a 5% increase in wages. It came in at about 4.6% year over year. And that caused people to get a little bit excited about the fact that maybe, just maybe, the Fed is going to ease up a little bit. I tend to disagree with that notion, but listen, we don't fight and argue with what the market is doing. What we do is we pay attention to what the market is doing, what the message is, and we go with the flow on that, right? So the markets apparently, and we had some lousy news on the ISM supply management report on Friday as well too. But again, that didn't matter. What matters is paying attention to what the price action is telling you, and you go with it accordingly, right? There's going to be days, probably sometime soon, where the markets are don't like the data and they sell off. We had a couple of days like that last week, at the beginning of the week, and then on Thursday. But you know, again, you have to go with what's happening in the markets and what the market action is telling you. So as it is right now, we have again, the markets are probably going to be opening above 3,900 on the S&P 500. Of course, the S&P cash is about 20 handles lower. So if we opened up right here, I guess we would be coming in at around 39.15, 39.16, a little bit lower, a little bit higher actually than the highs from Friday. We do see volatility is up here a little bit, 0.57. I think that is due to the fact that you know, we're coming into an expiration on volatility in about a week or so, and they're not in alignment yet. Here you can see the VIX cash and the 2170 and the VIX futures. But also we do have a speech by Powell, Chairman Jay Powell, tomorrow morning at 9 a.m. Eastern time. So I think there's always wonderment on what view he's going to say, and if he's going to pull any triggers and say, look, you know what, we're seeing what we like, and there's a good possibility we're going to slow things down. So you know, again, these are just verbal clues that the market is always looking for, and if that happens to occur, then fine. You know what, we'll go with we'll pay attention to what's happening in the markets and go with it. So a couple ideas that I had as well too I want to share with you, but before I do, I always want to go back to this chart here. Everybody knows I bring this up quite frequently. We see the S&P 500 stocks above their 50-day moving average, right? And so if we stay above the box, that's bullish, that's positive, right? But I guess we could certainly argue that there's a bullish divergence here, right, in this chart, right? We see a higher low. We have a low here from back in the fall, and we came up above there. And we had that big rally back in November, came back down and into the box, and we didn't penetrate it very much. So you could say higher lows in this chart, right? I think certainly you can make an argument for that. However, I think what's more important here is that we see that this particular indicator is spending a lot of time. If it continues to spend more time above the box, right? And it does, as it does that, it tells us that stocks are getting healthier, right? And again, I'm not making judgments here. There's a lot of things that that don't look real good in the markets right now and don't look real good in the economy. But this is an indicator that tells you is what that maybe some of it is already priced in. All right, that's all it's telling you, and that the market is starting to look beyond the bad news that is going to be happening over the next several months. All right. We all know that the market is a forward-looking indicator, and it's an assist, and it tells us a little about the economy. The economy is not the market. The market is not the economy, right? All right. So a couple of names I was looking at here include, last week we had a real strong breakout in Win, really good positive week. We have a bullish crossover on the MACD. We also have a couple of these other indicators down and down over here. We got a crossover on this trading dynamic indicator as well, and the relative strength is up here. It has been real positive since the beginning of November, these last couple months. So this is the name I have on my screen. A lot of you guys know I've been talking in the chat room about gold, GLD, and this one also broke out and also has real positive divergences in the indicators and positive price action over here. GDX is another one, which is the gold miners. GDXJ is also the junior gold miners. Also, these charts are looking very, very strong. Might be worthy of a good buy. Here's the breakout of that GDX and the GDXJ as well. Nice breakout last week on these metals. And then a couple of other names that I was looking at. If you really want to get sexy here, you might take a look at Netflix, get frisky here, and take a look at this one. Now, this one we were in recently, and it's a lot of volatility in this name. Of course, they have earnings coming out next week. I want to say it's either Wednesday or Thursday of next week. This stock, again, just kind of going sideways over here. This has a tendency to make very, very large moves. So how would you play a large move if you wanted to be in here with in front of earnings? You play it by looking for a big volatility move. And playing a volatility move means you want to buy what's known as a strangle. A strangle means buying an out of the money call and an out of the money put, right? So this is basic basic for buying something if you're looking for a large move in the stock. Okay, so if we see Netflix currently trading at 318, maybe you would try like a 350 call and then maybe a 300 put simultaneously. And you're looking for a big move up or a big move down. All right. On the downside, we have a name called Enphase, ENPH, which I picked up off the market gauge indicators over the weekend, and you can see this stock fell below the 200 moving average up here. It's been falling lately quite sharply. It's down from 300. Of course, what the relative strength is in the tank right over here. MACD crossed over here. It's looking really poor, and this is a stock that if you want to play something for the downside, this is probably a good one as well. Also, I noticed Google tried to rally back a little bit, but you can see it just continues to trend lower and lower highs, lower lows. The parabolic SAR, which is these dots up at the top, are continue to reflect bearishly on the name. Indicators are not moving at all, so I don't really see much interest in Google here from big institutional traders. You know, once it broke that box over here, it's never even come close to getting back into that box, which I put out there back in the spring and summertime of 2022. So that's it for the ideas here. So I also wanted to clue you into what's happening with sentiment here. We can see volatility has been dropping quite sharply, and you can see here's the octagon that I like to look at every single day, and we saw a big pop in the trend last week, and it came back down on Friday. This means it was really lopsided. A lot more issues that were being bought than were going up. So you get the skew to the volume over here. We see the volume, VOLD volume versus declines up here, accumulation distribution up here as well too. And we did have a trend day, a strong bullish trend day on Friday as well too, and with volatility dropping. So again, from the time the markets opened up, it was bullish all day long, and you could have, I did add some calls. I had some puts coming in. I got smoked on those things, but I said, you know what? I'm going to stop right there. I'm just going to add some calls. This is the direction that the market is going to go into today, and that paid off nicely by the end of the day. So that's going to be it. Oh, I did want to share with you the oscillators too, and of course, we always take a look at these things, and they're kind of a bit in overbought territory. We have the NASDAQ oscillator up at 185, the NICE oscillator at 170. We could go a little bit higher on these and pull back a bit. So I would not be surprised to see some selling on the news after Powell speaks tomorrow, and possibly from the CPI number print that comes out on Thursday morning. So keep an eye on those two things. There are a lot more Fed speakers coming out later in the week. On Friday, I think there's 4 of them, and today there's one. Raphael Bostic is speaking from Atlanta Fed as well too. So we do have a Fed meeting coming up in a few weeks. It's the first weekend after the first weekend in February. So it'll be interesting to see how that plays out. And again, just be careful, take it slow, just pay attention to what the action is telling you over here. I do think that having some puts on is extremely valuable here, even though the market looks like it's heading up. You just never know. We're still in a bear market. We are still in a bear market. Okay, so you have to use some protection, even especially now when it's rather cheap, when the VIX is 21%. All right, so that's going to be it, everyone. I appreciate everyone spending a little bit of time with me today, and we'll be back on Thursday morning with another edition of the Daily Bites. And be careful today. If you're in the chat room, great to be with you. Come join the chat room if you're not in already. You're going to learn a lot of stuff, and hopefully make some money doing what we do. So enjoy yourself. Have a great day, and I'll see you guys all on Thursday. Even when push comes to shove, it's alright. Everybody wants to know, but it's alright. Everything will work out fine, but it's alright. We're going to the end of the line. Don't have to be ashamed of the car I drive. I'm just glad to be